All right, hey there. How's everybody doing? I'm Christopher Franks with Texas West Capital, and we are live here from an overcast, slightly rainy Bernie, Texas. Here, a few minutes after 11 a.m. Central Standard Time. Guys, what is today? Is today Tuesday? Am I totally messed up here? It is Tuesday, right? The 14th, 2021. Gosh, man, let me check here to make sure. All of a sudden I had this big wave of uncertainty crossing over my head here. So it looks like I'm correct. Good to see y'all checking in. Who's in here so far? Jared the Great. Hank checking in from Thailand. Let's see here. Who else is here? Just in time. What's up? He said, bought the daily demand structure EQ. Not quite seeing the reaction I was looking for, but we'll see. CME really looks like it wants to hit the 44.2 level. Yeah, we'll take a look at that there on Bitcoin today. We've had some movement, some overlapping movement. Possible it could be a leading diagonal, but really, we need to see some impulsive movement up through a few levels to really kind of feel like, hey, that bottom might be in there. So, we've got our targets either way, and we'll talk about that today. Keith, what's going on, man? Data checking in. Let me see here. Who else here? Nevlusian, ARM, good to see you guys. Hey, listen, if you want to join us, you can do so at howtotradetowin.com. I'm going to warn you, though, again, we put out a ton of content. I put out a ton of content every month. So if you're new to Discord, it may be a bit overwhelming. Reach out, man. Send a DM to me or to Adam, and we'll help you get going a little bit there. You don't have to watch absolutely everything that's in there. We provide a lot of content for people depending on whether they're looking to trade Forex or crypto or metals or, legacy markets, like stocks or something like that. Whatever they happen to be trading, we put a lot of information in there for it. So don't feel like you have to come in and see everything. Our educational stuff is all easily found in its own channels under the members channels. We've got our foundation stuff, which is directly linked to our site, our stuff on the site. And then we've got everything that we've recorded over the last year and a half, all these we started out with once a week and then went to 2 a week and now 3 times a week. These live streams we have, Wyckoff, Elliott Wave, and tips, tricks, and techniques. And we've got all those directly linked there in their own channels as well. So the information is easy to find. It's easy to look for, but there's just a lot of it. And I realize that can be kind of overwhelming to people sometimes. So like I said, don't be afraid to reach out, DM me or Adam, or even just ask a question, there in any of the channels. And we'll help you guys out. Once you get used to it, you'll see just how great Discord actually works. It's a real good way to segment everything. But until then, like I said, it may be a bit overwhelming. It's a lot. And you don't realize it, guys. I could sit here and tell you all day that I put out a lot of content. But it isn't until you're actually in there and you see all the channels, you see everything that's going on there, that you're going to see it. I mean, let me show you something here real quick, guys. Let's see. I can put you in right there, right? So, I mean, if you're tier 3, you're basically seeing pretty much every one of these channels here. There's a couple of admin channels here, but all of this, guys, you got all your updates, you've got your indexes, Bitcoin dominance, you've got chart critiques, requests and requested charts there, you've got hot take opportunities here and the discussion. You've got all your daily update discussion channels here, which go with these channels up over here. We've got members channels all through here. Like I said, right here, you've got your Wyckoff streams, all the Wyckoff streams we've done, all the tips, tricks, and techniques streams, and all the Elliott Wave streams we've done. You click on there, they're all listed in there with little descriptions of what each one was about over the last year and a half now, I guess it is. We've got, gosh, man, so much in here. Our other channels right here, educational video series, that's our foundation. That's almost about 12 hours of foundational stuff to get you up and going with trading and whatnot. Once you go through that, then our weekly Elliott Wave and Wyckoff streams are easier to follow because this gives you all the basics, everything there. Just so much, as you can see here, guys, coming through there. So, like I said, we've got a ton of content. If you come in, just be prepared to learn. If you're only going to be there for a month, that's fine. But I want you to make sure that you are prepared to really learn as much as possible. You're not going to go through everything in a month. There's absolutely no way. But you can try to get through as much of it as possible. And so you can be a lot further ahead even after just 1 month with us. getting there and doing things a lot more correctly than what you've done it in the past. So anyway, man, we'd absolutely love to have you there. howtotradetowin.com. Do it. Who else is checking in here now? Blaze, what's up, man? Let me see here. Claudio, good, blah, blah, blah. I can't even say it. Good evening, man. Good to see you. Let's see here. Is that Diego checking in over there? Oh, is it that blue on the blue? Yep, there he is. What's going on, man? Daniel Mendez is here. Always great to see you guys here. So here's what we're looking at with Bitcoin, guys. So here we are. It's possible that we could be done with this wave 2 here. Within that, it's possible that we've got this wave parentheses 2 done here. Now, I was looking at this, and I think there's maybe 2 ways we can count this. We can look at this as a 1, 2, 3, 4, 5 here. And that gives us a 1, and then an A as a leading diagonal here, a B, and then potentially, a C right here, right? So we get the 1, 2, 3, 4, 5 here. And so that's possible. If it continues coming on down here, it's possible it still could be playing out. And so we're looking for this green zone down here at about 44,341 to 44,748. That gives you the EQ of this demand structure here to the S2 pivot on the 1 and 4 hour there. And as you can see, that's right there between the 70.5 and the 78.6 retracement level. Now, in that case, I've been looking at this. It's possible maybe that we've got a 1, 2 here. I'm sorry, a 1 here, and then an ABC, and then an ABC, and then we get a 1, 2, 3, 4, 5 ending up here. That's the other possibility. But I'm not too worried whether the 1 is up here or down here right now. I'm just interested in is 2 done here, or are we getting over here? If it happens to continue below the swing low here, then all that means is, hey, we're still building out wave 2 there. We'll look at the S3 pivot to begin with here, around $42,050, and then this 41,460 kind of area. Though it could come all the way down to this descending channel support down here as well. Now, I don't think that's where it's going, but we'll see what happens. Right now, what we're looking for is, okay, first step is break out above this swing high right here. So this is 47,984 and 49 cents here on Coinbase. If we could break out above that, that's a good sign that maybe this is a leading diagonal here. 1, 2, 3, 4, 5 maybe, and then ABC. And so a breakout above that would be a good sign there. What we're really looking for is an impulsive breakout above this area right here. So this swing high at 49,372 and 8 cents, and then the 1 hour pivot just right above it there. We're looking for an impulsive breakout above that. Because if we can get that, then that's likely going to take out wave B resistance here at 50,828. Which then sets up, just generically, it sets up a target of this descending channel, descending wedge resistance here. If we break out of that, that gives us a pattern target of $15,701 above the point of breakout, and that's based on the height of this descending channel, descending wedge, whichever we want to look at it there. Based on, as you can see, that's most likely going to get you right up here into this supply structure up here, right? If this is 1 and 2 and we're done here, then wave 3 has a minimum expected target of 61,357. All right. So those are the targets, the different ways to look at it. That's pretty much where we're at with all this, guys. So either breaks down below swing low here and we'll look for a bounce, a reversal off that S2 pivot area, or potentially a breakdown below here, getting to those lower targets, or we're going to get a breakout first above this recent, what was this? Is this today or yesterday? This is this morning's swing high up here. Breakout above that, which should then set up the breakout above this one, which then sets up all this. That's really all we're looking for, guys. And then your targets are, what we discussed there. So that's kind of where we're at with that. As you can see, the 4 hour is, now see the 4 hour, we've got this bullish divergence right here. It's got lower lows here. It's got higher lows up here. That gives us this rally here, and then it drops back down. And so we don't really have bullish divergence here, but it is important to note that we are getting higher lows generally off the oscillator here, off the RSI, while we're getting lower lows here off price. So it shows that demand is showing up, and that's what you kind of want to see in that area. If I'm looking at this range right here, I see that volume's dropped off there. And then we've got this big spike of volume down here, great lower wick. Potentially this working as a spring. It popped right back up, and then it came back on lower volume. And so potentially a spring there. As you can see, lower volume even on the pullback here, which is just right into this kind of the support area here. So we want to see some rally back up there. I think there's a lot of things pointing to the possibility that we'll get that, but we've got to see it happen to do it. Remember, we don't anticipate the market because that's just gambling, and we're not gamblers, right? We're traders. Trading means that you're waiting for confirmations. It's a story as old as the hills out there, guys. And yet the fact that new traders in general, amateur traders in general, tend to try to anticipate the market consistently shows that they just don't know, right? They don't listen, they don't care, they don't know. I'm telling you right now, so if after this point, if you guys go out there and you continue to anticipate the market and enter before you're getting confirmations, then you're really not trying. And I don't mean that to be rude. I mean that as a wake-up call. Because I'm telling you right now that if you enter a position without confirmation, you are anticipating, and anticipating is gambling. Now that doesn't mean that just because you get a confirmation that it's definitely going to do what you think it's going to do. But it means you've done most everything you can to put the odds in your favor when you enter a trade, if you're waiting for that confirmation. Confirmations are an absolute must, guys. Stop worrying that you're going to miss some breakout that's just going to continue up and not come back and retest resistance as support. It happens sometimes. But in the span of a year, almost all the time you're going to get a retest of that resistance as support when you're getting breakouts. And I talk about breakouts specifically here because that seems to be what catches most new traders. They're trying to do that breakout or to get in before it even breaks out, again, anticipating that it's going to. And then price doesn't actually break out and pulls back against them. And next thing you know, they're either chasing to try and cover their shorts there, or they're getting liquidated. And that's a whole nother story right there, the liquidation, because that's going in without even using proper risk management. Like I said, guys, these are just the general things that you have to do no matter how you're trading. And these are things that are easily learned, if you're just with us for a month even. You can get all those basic stuff down at the very least. So at least you've got a fighting chance to make some profits now. If you're doing anything other than what I'm talking about now, you're losing money pretty consistently. I know. Again, stuff I used to do as a new trader, right? It's this thing that everybody does as new traders. And you don't want to be that new trader, right? You want to make money consistently, right? You got to do the things that are going to do that. They're going to lead you to possibly doing that. If you're doing anything else, if you're anticipating, if you're not, waiting for confirmations, then you're all but guaranteeing you're going to lose your money. It just is what it is, guys. You got to decide, do you want to really trade, or do you want to sit out there and think you know what you're doing and consistently lose money? That's the cold hard truth, the facts of what's going on. Man, I am stumbling all over my words today, guys. Words are hard today. I do apologize. Let me see here. What's going on, Bill? Good to see you checking in. GT checking in. Brian Allen, what's up, man? Let me see here. Spiral Architect, good to see you. Let's see here. What is your count if we were in markdown? Yeah, Hank, I don't think we are right now. Like I said, if we're breaking down here, all that means is that wave 2 is incomplete at that time, and 1, 2, 3, 4, and you're looking for that fifth wave, which would most likely just be just a little bit down. That's what I already said. So it just means that wave 2 is not complete yet. I'm not going to give you a count just to give you a count to up here, because again, we've already talked about this, Hank. We've talked about this last time with the difficulty in making this, an ABC and an ABC here. We've already talked about two streams in a row now. So, until we're getting some significant breakdown below this wave 2 here, the same thing I've said for, a couple of weeks now, there's no real significant idea that there's some kind of top in here, some kind of major top in. All right. By the way, we are in markdown here from here. this area right here. So when you say markdown, all I can assume is you're talking about from this distribution right here, which we're clearly in markdown through the swing low. There is no other markdown though. There is no, unless this range right here, this is not marked down. It would have to break down below here to be marked down. So yeah. Just kind of, this continues to be the first key level right here, this wave 2 swing low here. And so, again, as I've said since we kind of started breaking down here, what is this, last month, right? I've said that this is going to be that big place we're going to have to watch overall. Until we're getting below there, I'm not even worried about this being any kind of real significant top. We get down here, it doesn't guarantee it is, but then it starts bringing up that possibility a lot more realistically. But as long as we're above that, it's still just a 1-2, 1-2 possibly printing out here. Yeah. So that's what I'm watching. So it just comes to what we're doing locally here. Yeah. Let me see here. What's going on, Brian Riley? Good to see you. Let's see here. Bill says, interesting mindset that some people have about taking profit. I know a chap with 14 Bitcoin and several other significant holdings in alts and yet refused to take profits up in the mid-60s. He's now down over 450. Well, is he down over 450 or is he still up overall? Again, we got to think about how we frame what we're, the way we're looking at it. If those were from significantly lower, he's still up for quite a bit, right? If he bought somewhere, in this area, then he's down, Yeah, he's maybe 450,000 from the, on the pullback temporarily from that top, if we rally back up. But as far as, again, how much is he down? If he is, again, bought below where we are right now, then he's still in profit. So we always have to be careful how we do it because how we look at it colors, how we look at it colors how we understand our trade. And, with a lot of new traders, unfortunately, the problem is that when you go in there and you start thinking like that, right? And you start thinking, oh my gosh, I'm down this money here, but you're really up overall. This part that you say that you're down ends up playing a lot stronger with what you're thinking and how you look at the market, which then makes you, unfortunately, do things with your trade that you shouldn't normally do. You should always concentrate on your overall, whether it's a profit or a loss, not on that, how far you're off from the top there. Yeah. Because, if his is a longer term trade and he believes this is just a temporary pullback here and we're going to head up higher and he's in for, another 6 or 12 months, then, maybe it doesn't make any sense for him to pull, to trade out here. If you're in the U.S., for instance, there's tax laws, right? And so if your plan was to hold for more than a year and you think this is temporary, we're heading up higher, then you don't want to get out because you're going to incur the larger of what's going on with your taxes, right? I mean, even if you're debt, let's say he got in here, right? And let's say, I know you're in the UK, but let's say you're in the US, right? And you buy here and it goes up and it's coming back on you, you're still in profit. And if you're expecting, like I said, for this to maybe be discount, for instance, and you're expected to head up higher and you want to hold it for more than a year so you can take advantage of long-term capital gains versus the short-term capital gains, well, then you don't want to sell that, right? It all depends on your approach. If you're trying to just, if you're trying to make swing trades, larger trades, what are your tax consequences? Or are you trying to be an everyday trader, somebody that day trades, that's looking to make income off it. Yeah, I think all those things are important to understand personally, what you're doing if you're as a trader there. Let me see here. Let me kind of catch up here. The daily EQ demand test was also the daily retest of RSI breakout minus the bear div at the top, just in time says. Also form a potential bull div on the daily. Yeah. So here's the thing. Yeah, if we're looking at the daily here, we've got this possible bullish divergence here. And we did dip just into oversold here, guys. We got down to 29.97. Oversold is 30, so 0.03 down into oversold. But nonetheless, it was the first time we hit oversold since back here in May, right? And so that reset us down there. And remember, that one was this big, huge sell-off here. So, we could see something similar here, kind of play out in here, and just get it before it heads up. But the key is that it reverses prior to that wave 2 swing low here at 39,600. You want to see it turning up, before that. Let me see here. Your weekly, as you can see, is reset down into oversold here. We're just about bottomed out on Stochc RSI there. We do have hidden bullish divergence printing here. Let me kind of throw this in here real quick. On the weekly, so large time frame, so that's a big thing to watch there, guys. But it's nothing that's going to resolve it. It usually won't resolve itself, within a week. But you want to make sure that you are paying attention to that, because this is that larger time frame, and you do have a pretty clear, hidden bullish divergence here, especially with Stochc RSI almost bottomed out and oversold there. Again, going back, we've got this attempt here for demand to show up down here with the RSI showing up there. So we'll see if we can get that. The 1 hour, let's see here. Yeah, so 1 hour is just showing a lot of, here's what's interesting about this 1 hour here. So you get a little bit of volume up here at the top. Okay, so supply's coming in. You expect that. Why? Because of right here, right? So you expect that. Supply coming in. Now you see a spike on the first drop. It comes over here. You get a really more volume, actually less volume coming in on that next one there. But it's that one at the bottom here. It's this little doji at the bottom here. Look at how the volume kicks up even more than everything else. Demand showing up. And now you're getting a possible bullish engulfing candle printing here. Let me kind of get this out of the way. So, this looks like it's down in 3 waves. Again, the idea that maybe we're getting a 1, 2, 3, 4, 5 here as a leading diagonal, and then an ABC. By the way, if that is a 1, 2 like that with the leading diagonal ABC done, that'll give us a target then. That'll give us, a 1, 2, 3 up here at 50,215 minimum. And then 5 up here at around 51,075. Let me see here. That gives us a 23.6 pullback, keeps us above that 1 hour pivot. So we might see some overextension here heading up higher. 38.2 will be there if we can get up to 52,272. Just about the 50% will get there if we can get up here to the resistance and pull back. So we could see some overextensions on the way up here. With this, if this is, and this is starting out here as a leading diagonal, we usually should expect a nice strong third wave coming up, because your leading diagonal really is just a bunch of overlap, right? And so when you're overlapping like that and just kind of heading sideways, it kind of sets up the idea, that you're building this base here and rally up. Again, you can look right here. You see how that volume kind of drops off, does nothing around here. And then it pulls back, and now it's starting to kick up. You see this overall volume has risen in this area right here. Right as it pulled back into this area. That's important to note. That shows you demand is really kind of kicking up in this area. Trying to protect this. And now we've got this possible knockout here, right? So, I would be interested. I would say that if we get a breakout above this descending resistance right here, that's going to be our first clue that that bottom may be in there and we're heading up. Just through this right here. So, we're getting near there. We break out of that. First target is this the swing high in this area. We break out through that. We should be up here. We break out through that. Wave B. Break out through that. Descending resistance there. Let's see here. Let's see here. Let me see. Let's see. I gotta get rid of these people. Always showing in. Add to the block list. There we go. Okay, Bill. Yeah. You say significantly up when Bitcoin was about 8. So at about 10. Yeah. Yeah, exactly. We just want to be careful about that, because, guys, remember, as traders, the thing that affects you the most is your emotion. So, and your emotion is driven by things like candle color, volume color. That's why I keep telling you guys, white and black candles, black volume. Just do it. Trust me on this. It's gonna relieve a lot of that that FOMO and stress that you feel a lot of times as you're trading, because it's no longer visually emotional. Okay. And then of course beyond that, the words we use. That's why, for the last few years, guys, I've been real adamant about trying not to use the words bull and bear and telling you guys about that. Because as traders, when you use the words bull and bear, it creates emotion in you, whichever way it is there, right? Whether you're talking about bull or bear. And those emotions are going to cause you to take trades and do things that you wouldn't normally do. And that's the goal. You don't want to do that. So if you can fix your colors on your chart, if you can fix your language, these things are bigger than learning how to do Elliott Wave, than learning how to do Wyckoff. These things are the basis of becoming profitable traders, consistently profitable traders over time, right? If you cannot, or you choose not to change these things, it's going to make your foray as a trader a lot more difficult. A lot more difficult, okay? And it's already, again, trading is simple, but it's not easy. And again, it's not easy because of all that emotion and everything else that goes on. So do the things you can do that are easy to do. It's easy to change the colors on there. It's easy to use words other than bull or bear. You can use downtrend or uptrend. Think about that. Say it to yourself, guys. Say the word downtrend. Say the word uptrend. These are just words, right? They don't really create a lot of emotion. If you say bullish, though, you start thinking green, right? You start thinking we're going higher. You say bearish, and you start thinking, oh, God, I got to sell, right? But just think of it in terms of trends, and then trade the trends. Don't worry about who's bullish or bearish or whatever. The one thing, I sit here and I do this, week in and week out, and the one thing that I've noticed is that the people who are new to trading, who are amateurs, trading, have not really gone through it and understood it. They tend to hang on these things. They want to call you, oh, you were so bullish last week. Oh, you're so bearish now. They say these things that really mean nothing. But it means something to them because they don't understand what they're doing, right? But to us as traders, we're just working with what we have, right? I've told you guys for years now that as a trader, the one thing that identifies you as a trader is the ability to change your ideas if new information comes in that says something different. You can look at a chart and go, you know what? It looks pretty good right now. I think it's probably going to go up. But if a few days later, if volume's kicking in, you're getting larger candle spreads to the downside, and all of a sudden, it doesn't look anymore like it's going to go up. As a trader, you need to be able to acknowledge that and trade it appropriately. You need to be able to say, okay, well, maybe I'm wrong on that. That's okay. I need to note that I'm wrong on it. This idea that you're going to be right all the time, or even significant amount of the time, is just nonsense, guys. But you don't have to be. That's the thing. If you utilize proper risk management, you don't have to. You don't even have to have a winning rate on that. You can win less than half of your trades and be significantly up. But it's all these things that you have to do, that you can do, that are easy for you to do, that most traders don't do. That's what it's all about, guys. I've told you about it before, again and again. I've told you right now. If you leave this stream and you do not do these things, that is 100% on you. You have been told what it is that you need to do. You've been told how to do it. And the question is, are you going to do it? That's the question. And most won't. That's just kind of the way it is. Again, guys, I've been doing this a very long time. And I've been mentoring traders for quite a while now. And the common theme that I get from these traders is that they're not doing the things that I said that they need to do. Oh, I don't have the time. Oh, that doesn't sound right. Oh, I know more. And then they keep doing these same things. And then they come to me and say, but Chris, man, look, it's not working. What's going on? And I said, did you do this? No. Did you do that? No. Why haven't you done this? Well, because... Well, okay, if you're not going to take the steps that you need to take, you're not going to get any better at what you're doing, guys. All right? So you got to remember that stuff. Let me see here. Oh, I got to catch up to you guys here. HS, what's up? It says, I like light and dark blue. Would you advise black and white? Black and white guys, by default, are the way to go. Because they are just that. They're just neutral, right? Black and white are neutral colors, right? I guess you can use blue, but you may still feel some emotion. Again, it really has to do with the color. It's not just that it's red and green, though those are significantly emotional colors. So it's not just those colors, but it just colors in general, just the brighter colors. But yeah, you could try it with the blue and see if that works. And if it works, then that's fine, do it. But if you see that you're still getting emotional when you're looking at those colors, definitely change to black and white. I know it's all about customization today, and everybody wants their own colors, and we've even gone through a few iterations of colors and whatnot. But I always return back to the black and white because it's simple, it's clean, it's crisp, it's easy, it's non-emotional, it's neutral, everything that you need it to be as a trader. Okay? So I mean, yeah, try it with the blues, see if it works. But I know black and white works. I know that works. Let's see here. What is happening? What's up? It says the effective phrase I got from you is risk management and protect your capital. I've had a hard time pressing the sell button because I would feel too happy at the time of being up in my trade. Yeah, well, again, it's just about, that's really where it's at. It's all about risk management. It's all about protecting your capital. Because here's the thing, guys. At the end of the day, if you can't keep from losing significant sums of money, you're not going to be in here long. You're not. And it's very important, especially at the beginning when you're first learning, because you're going to be wrong a lot more than you're going to be right. You're just learning. You're trying to figure out how to use Elliott Wave correctly or Wyckoff correctly or whatever trading style you're doing. And so you're necessarily going to get it wrong a lot. You have to protect yourself from that learning experience. And because, it just takes one loss at 50% to just really set you down. And that happens all the time, right, guys? I mean, we've seen the liquidations, right, that happen. You want to do everything you can do to protect you from you. It's not Wall Street. It's not some crypto whale or anything else out there that's going to take your money from you. You're going to lose your money. It's you that you have to protect yourself from. The emotional side of you. That thing that makes us human. You have to protect yourself from that as a trader. Yeah, so definitely pay attention to that, guys. Let's see here. Yeah, just in time, bringing up all the thing about colors with advertising and marketing. It's exactly true, guys. It's the same thing I tell you. A lot of times you guys go and you'll pay money to these other people because they promise you that you're going to have these great returns, They get this, they say, oh, look, we had this 80% win rate during this time period or something, but they don't tell you what the whole thing was or how it's been over the year, and it's especially dangerous right now to listen to some of these guys who tell you, oh yeah, we've got this great win rate over this last year, because everybody's had a great win rate over the last year. You basically just had to buy in at some point and hold for a little bit. The market was very bullish. It was going up a lot. I keep telling you guys, in a bull market, everybody's a genius, right? But these are the exact same things. They get on these keywords and on these ideas that they know you're looking for, because you're looking for the easy way. You're looking for the thing that can be done for you rather than learning to do it for yourself. And again, this is not direct to anybody in particular. This is just amateur traders in general, the things that we go through when we first learn to trade, right? But again, the reality is, if you could pay somebody to be consistently correct, you wouldn't be able to afford it. I mean, I've told you before, I could offer this service. You may just get one trade a month, or you may get 10 trades a month. But, I can set up a service that says I'm guaranteed, you're guaranteed to make profit. But it's going to cost you thousands of dollars a month, at least. Because it means finding the correct trades that are great setups and are most likely going to do the thing that you think it's going to do. It's not just throwing out 10, 50 trades a week. But that isn't the thing that most, amateurs, traders want to hear when they come in. So people don't tell you that. They say, hey, listen, we'll get you up there. And then you end up losing money, and then you're upset. But they don't care because they don't care what their churn rate is. They don't care how many people are coming out because they got new people continuing coming in because they keep pushing that psychological button on you. They don't care. They got your money. So, this is why I do things the way I do it. This is why it's all about that education. Do we have setups? Sure, we have setups. And we tell you what we're looking for where you need, where the, if you're breaking through there, this is, the likely first place that you'd want to enter. If you wait till this point, you got more confidence in it. If it drops below this level, you need to be out. I mean, we do that because I can't guarantee you what trades are going on there. But we get a lot of trade requests from our Tier 3 members that we end up putting the hot takes because they end up being pretty good. But I will never tell you, listen, you need to buy right here and sell right here because that's just stupid. I don't have time to sit there and watch that trade all day long. I'm trying to teach you all how to trade. So, again, guys, if you're getting excited because you see somebody online that tells you, they guarantee all these great wins and all this money you're going to make, or they tell you that trading's easy, or they tell you that you're going to learn how to be a successful trader in a day or 3 days or a week or whatever. Guys, you have to understand, they're hitting your emotional cues. They're telling you what you want to hear so that you go and pay them the money. But the reality of it is, none of that is true. I know, I've been doing this a very long time. I've checked out a lot of these things. Because for me as a trader, if I can find something that makes me more successful in a shorter amount of time, I'm going to do it. I've wasted a lot of money over the years testing these things out. I know. And again, this is what happens. This is the same common denominator with all these things. But see, I don't do that. And so we've got about 300 members. Instead of 3,000 or 10,000 or 20,000 like these others. Because I care about whether or not you're going to learn or that you want to learn. That's the difference. Let me see here. He changed his profile picture. It looks like on there. What's going on, XRP Bandit? Good to see you checking in, man. Leighton Stone Blue, what's up, buddy? He says, pull the daily fractal from the 21st of September bottom to the 10th of November top. Let's see here. What? From the 20, I got to see again. 21st of September to the 10th of November. Is that this right here? 21st of September. Okay. That's over here to the 10th of November. Is that up here? Okay. Pull that and do what with it? You gotta let me know what you want to do with that, man. You said pull that right there. I mean, we can do that. Let's see here. Boom. There we go. That's that right there. But now what do you want me to do with it? I pulled it. Guess we'll put it right up there for right now. Let me see here. Just kind of catch up with you guys here. Bill says being colorblind must be a huge advantage when doing TA. Hey there, Crypto Girl. Good to see you. Let's see here. Blockchain Gains. What's up, man? Michael Otis. What's up, buddy? He says, I work for an automated crypto trading startup. A lot of the bots win under 50%, but they win big on the successful trades, which is why the platform is successful. Exactly. The idea is that you want to cut your trades with minimal loss, minimal, hurt to your bottom line. And then the trades that you get that work out, they work out and you continue to ride them up. Exactly. Blaze, you took the grid off and changed volume to black? Welcome to the club, man. He says switching to black and white truly helped. It really does. Let's see here. Let me kind of catch up with you guys here. Overlay on the 4th of December bottom. We could follow this move up once again. December 4th on this one down here. So you're saying kind of this thing right here? Yeah, I mean, possible. I mean, it's just the same old, right? You get down, you form a range, and then you take off, right? Pull down, form a range, take off. You get down, form a range, take off. Yeah. Again, human beings are creatures of habit, and we tend to do those same things over and over again, right? We move back and forth between fear and greed, and then back to the mean, consistently, right? It's always generally the same way. So what happens in the markets are not abstract. They're not irrational. They're not unknowable. Now, I think when people say that, they expect that it's going to happen exactly the same. No, it doesn't happen exactly the same. Your ranges take different forms and shapes. Sometimes there's a spring, sometimes there's not. Sometimes there's a terminal shakeout. A lot of that goes in there. But at the end of the day, it's the same thing, right? You basically pull back, you create a range, you go up. Now, sometimes you come down and then you rally back up. And so you're making that accumulation as you're rallying there, and then you get to a reaccumulation area, and then you continue up. So there's variations of it, but generally the idea is that movement, works about the same way. So yeah. Let me see here. Let me jump over here real quick. DXY, guys, man. So we've got basically this consolidation up toward this resistance here. It looks almost like a barrier triangle. I've got that as a 1-2 and then a 1-2 here. If this is a 1-2, then that moves this minimum wave 3 up here to 97.125. So that's what we're going to look at there. Pattern target on this kind of consolidation here is around the R2 pivot on the 1 hour. So we do have that. By the way, you'll notice we broke out through the pivot up to the R1, pulled back to the pivot, rallied off it impulsively. That's a pretty good sign. So I would expect that we continue up higher in that. Don't forget, guys, Wednesday, the FOMC, that's tomorrow. They're meeting today and tomorrow, so they're going to release their minutes tomorrow. What are they going to do with taper? This is something, if you guys have been following me for the last year, that since the beginning of the year, where everybody said there's no way they're going to stop tapering before next year. There's no way they're going to raise interest rates next year. And I told you guys, I said, yeah, they're going to start tapering before the end of the year. And I said, and I'll bet you they're probably going to do around 3 interest rate hikes next year. At least 2, probably around 3. And so where are we at right now? Well, with that hot CPI number coming off last week, that was the greatest rise in prices that we've had since about 40 years ago, the early 80s, which was at the end of that huge inflationary span during the 70s, right? And so those came in really hot. And so, yeah, again, we looked at, we talked last Tuesday, we discussed that, I can't remember who it was. I don't think it was from Citibank. Whoever it was, one of the analysts was saying that they were expecting, again, the Fed to double their taper now. So from 15 to 30 billion a month means it's done by March, right? And so here's the thing. If it's done by March, realistically, I mean, it may be a bit of a reach, but realistically, banks could raise their rates 3 times by the end of the year. So, when everybody else was saying, oh no, it's all going to do this, I was telling you guys, no, it's probably going to be this other way, right? And that's what we're looking at right now. So I wouldn't be surprised tomorrow at all to hear the Fed say, you know what? We're going to raise it to 30 billion. It's just, you can't not do it. And again, the response I get from people is, oh, they can't do it because it's going to hurt the economy. Well, they can't not do it because it's already hurting the economy. This is that thing I've been talking about all year long, about how they were going to be painting themselves in a corner with what they were doing. And we talked about it. We talked about the reverse repo and how that started kicking in, and then it became permanent, and what that means, and how the banks, the bank laws work, the federal regulations for the banks work, and deposits, and how real money is created, and how this all affects what's going on. We've been talking about that all year long, guys. And here we go. We're getting this. So again, tomorrow, I'm expecting that they're likely going to say that they're going to double that. I can't even be surprised if they were to say they were going to do more than that, but I think double is probably a good target. And again, that's going to be dollar bullish out the rear end. And that's going to be negative for pretty much most everything else. Now, again, that goes, well, what does that mean for Bitcoin? Well, it depends. Again, Bitcoin's this thing where people think it's going to do all this great stuff tomorrow, right? Kind of idea tomorrow, right? I think Bitcoin, even if they say that, I think Bitcoin still probably has further upside still to go. Again, I think we're probably looking now at end of Q2, beginning of Q3, so beginning of summer maybe next year, to where we might hit the top. But, even if I say it, the thing is we've still got to get up here. We've still got to get above the all-time high, right? So we've still got to get that breakout there. If we don't do that, it is what it is. But we're going to play it locally and watch these additions, these movements as it does, and see if we can't get these steps moving on the way out. But why would that do that and everything else kind of go down? Well, because, again, people that are invested in cryptocurrencies right now are of a different type in general than those that are invested in stocks. But at the end of the day, they both have their level at which point they go, I can't keep doing this right here now. I got to get out. I just think that Bitcoin with the newer thing, and now it's getting a big, and all the young kids out there with their money and kind of getting into it and thinking they're going to be millionaires next year, next month, all this kind of thing. I think that's going to prolong these levels, these higher levels. But we'll see. Again, it's just my thought. It's just my analysis of what's going on at the moment, and that could change. But right now, nothing has happened on that larger time frame to suggest that it's going to go the other way, guys. It may, but we still need a minimum breakdown below that wave too. Minimum. To just really start looking at that, right? Let me see here. Man, Hank, you're going to drive me seasick here if you keep changing your pictures, man. Hey there, Trader XO. What's up, buddy? Good to see you checking in always, man. Hope life is treating you well. Let me see here. Yeah, y'all see Trader XO sitting in there, right? He's a good guy, man. He kind of tries to act like a jerk sometimes online. He's a good guy, though. I think it's really just a product of the idiots that just harass the heck out of you when you're public like that. It's so ridiculous. Let me see here. What else we got going on here? Let's take a look real quick here at silver. Jerk to fit in with the CT crowd. Pretty much, right? Oh man, let me see here. Where are we going here? Let's get this posted in here. We'll bring up what we're looking at silver at the moment. Oh, there we go. Yeah, look at that big, huge drop down. Large volume close to what we had way over here at the bottom, bringing it on down. Broke down through wave B here, through the ascending channel support. I'm looking for a wave 5 down here at around 21.45, wave 5 of 5. Let me kind of zoom out here a bit. Man, so as you can see, the 4 hour has not dipped into oversold yet on the Stoch RSI there. Daily, we're kind of down there, but RSI still kind of sits above that, right? So again, we still have this huge range here on silver that we've had all the way back here since August of last year, so over a year now. And so right now, coming off this, you've got a high, low, lower high. I guess you can go down here, lower low, lower high potentially. This has to break down to a lower low to make this as a lower high, because otherwise it could be the start of a new trend upward. But right now, daily, moving in sideways between the pivot of the S1, trying to find some support on that S1. If we can drop below this swing low here, I think it really sets up a good move down overall. It gets us on a breakdown through this. We do have volume picking up here, through here, up into the top there. It's dropped down a bit, so we'll see what happens. We see volumes picking up a little bit down here at these lows as well. But it definitely won't be a good thing if we see it drop below here. It'll be that, what I'm kind of looking at, that lower down there on it. Let me see here. You're 90% stable coins and 63,000 trader. Ah, man, I'll tell you what. That's, if you're trading day to day, that's not a bad place to be until you're getting some confirmations, right? That's what it's all about, man. Like I said, anticipation is gambling, but confirmations are where it's at, right? Right here with gold, I've got this this drop down below wave 1 here. So it looks like we've got this move up here for A, B, and then C as an any diagonal. So we've got a wave 3 target down here at about 17.54 and 10 cents. Bigger picture is what it is. Remember, gold, everybody got excited on the breakout here. And then, of course, it dropped back down in there, right? And we're down there, and not only that, but now we're dropping below. We're trying to find some support on here. But if we're losing this swing low area here, we should move down pretty easily toward this wave circle B support over here at about 17.21 and 10 cents. So, again, gold not looking overly great as well. It looks like we're just kind of consolidating here before potentially pushing down even harder there. You're more into macro trading these days, trader? Ah. Oh, man. Yeah, those longer time frames, man, they're just easier to trade, guys. You're going to be right a lot more than you'll be wrong. But, you come in as new traders, guys, and you want to trade all day, every day, right? Trust me, that gets old fast. When you get my age and you've been trading a while, you just want to find the good trades, sit in it, not worry about it for a while, and spend your money. It's kind of the way that we do that, right? Let me see here. Can I short cryptos in the U.S. or stocks? Well, sure, you can short stocks. Sure. Cryptos are a lot more difficult. The only exchange I can think of as a U.S. resident that you can, short stocks on is Kraken, but you have to meet, I forgot what it's called, a certain qualification to do that, which means basically you have to have millions of dollars in assets. It's more than the qualified investor. I cannot, for the moment, it's just completely not in my head at the moment. But yeah, they make it really difficult because, the U.S. makes it very difficult. And they're based there out of San Francisco, I believe. So, yeah, if you can meet that the specific qualification on there, then you can short it. I wish I could think what the heck. The word is just escaping me at the moment. There is KuCoin. Michael, that's right. KuCoin. Now, for right now, there's no KYC. And you can short on that. You can use that right now. But the no KYC, it doesn't mean that they're welcoming U.S. residents, but it means that if you are a U.S. resident, there is no paperwork, KYC paperwork to fill out at the moment. That will change. I have no doubt that will change. But if you want to do, that's probably where you got to go at the moment. Thank you for bringing that up, Michael. I forgot about that. Let me see here. No, Trader XO, it's more than accredited investor. Accredited investor is, the $1 million or the 500,000, 350,000 net worth or income over the last 2 years. Oh my God, I'm telling you guys, words are hard for me today. It's God, dog. You know what? I'm gonna look real quick. Give me just 1 minute. It's gonna drive me nuts if I can't remember what that is. Give me just 1 second. Tell you guys exactly what the term is that you've got to qualify for. Let's pull this up. 2FA codes. These are so much fun, all right? Oh, let me go through my list here. All right, so the term is... Oh, it looks like Luna's going to be listed on there. There's an announcement. Luna's going to be listed on Kraken. Funding's now live. Let's see here. Eligible contract participants. That's what it is. And so that is defined to include, among others, individuals with more than $10 million in assets invested on a discretionary basis, or institutions with more than 10 million US in total assets. Okay? So that's to keep them in line with regulatory guidance, as they're saying there. But you self-certify on that. Don't lie on that stuff, guys. It gets you in trouble. But that's what it is. As a matter of fact, let me see here. Here's the link for you guys. I'll pop it in there for you in case you want to check it up yourself. Let's see here. Trader says, be right back, going to register on Kraken with my 10 million USD. What's my opinion for tomorrow? Market's going to crash or keep going up? Yeah, I already talked about that. But basically, I would not be surprised at all to see them doubling to 30 million or 30 billion on their taper. And if they do that, that shouldn't be very positive for the markets. That should be negative for the markets in general. It's very dollar bullish because what that suggests is that they're going to go to raising interest rates. And if your country is raising its interest rates, well, that makes your currency more valuable because you can loan it out for higher return, right? Yeah. So I think there's a good chance the markets could dip pretty good tomorrow if they say that, and I think there's a good chance they're going to say that. So yeah, that's what I'd be looking for. Let's see here. So basically, just Chris can short on Kraken. No, Hank, you can't just register offshore if you trade seven figures. Again, many of these things are still going to have the KYC and whatever. And then if you do trade with an exchange that's not in the U.S., if you're U.S. based, you do trade with an exchange that's not not in the U.S. Don't forget to fill out the proper tax paperwork. Okay. There is other tax paperwork you have to do because that's foreign income, or I think that's what they call it. God, what is that dang form? Oh, it'll come to me in a minute here, I'm sure. So yeah. Michael says DXY is sitting just below the 20-year parallel channel top. The news could or would send us into a multi-year bull USD market ? It's possible, yeah. It's definitely possible. I mean, you look at the ECB, and so the ECB, and why do we look at the ECB? Because they are basically the other side of the DXY, right? And so the ECB, has this thing where they're going to still buy up a lot of, they're still going to pump a lot of money into the markets, they said, when they close up what they're doing right now, so around March or April. And they say they're still going to print still going to pump a whole lot of money into the markets, right? Because they don't want to take the chance that they try to withdraw that and the market's still weak. So opposite of that is DXY. So if they're still doing that and the U.S. is raising its interest rate, taper is done, potentially going to raise its interest rate, yeah, they could really send it up strong because you've got two opposite things working in the favor of the U.S., right? The U.S. dollar. You've got the ECB continuing to drown everybody with the money coming in, right? And then you've got, which means their interest rates aren't raising anytime soon if they're still doing that. And then you have the U.S. who then closes its taper, finishes its taper, and potentially is going to raise its own interest rates. Yeah, that could be a double whammy. Yeah. Yeah, and then you've got all the lockdowns potentially over there with Omicron and all that. Sure. Hank says, if you trade seven figures, you can afford to set it up an offshore company and hire a lawyer to set it up. Yeah, but you still got, you have to do it. Just because you set up an offshore company doesn't mean that you aren't beholden to the U.S. Laws that are going on. It depends what country you're looking to trade in, and it depends on what your position within that company is. It's not just the company itself. So yeah, there's a lot more to it than just, you trade more than seven figures, you can move out. Though, like you said, if you do have that, you should look into potentially finding a lawyer to set you up with a offshore company to maybe give you access to those other markets. Or heck, if you're doing that much, just move to another country, right? Hank will welcome you. His home's open, right, Hank? Let me see here. Okay, yeah, so that's what we've got going on there. As far as the markets go, real quick here, guys, let's see. I'm going to get out of here in a minute. The NASDAQ composite here, tumbling down this morning. I had mentioned to Discord that in the last update last night, I said if we drop below this level, we're going to fill it. We're going to drop to the bottom of that gap at least, and that's what we've done. The count right here I've got is a 1-2. Dropping below this wave B support at 14,931.61 should indicate that wave 3 is in progress toward a minimum expected target of... By the way, is everybody still talking about Santa Claus rally out there? I was still hearing that the other day. Right here about 13,742. Let me get rid of that. Something different. So, yeah, looking for that to continue lower there. 13,742 gives you that minimum expected wave 3 target there, guys. And so I basically got this as a 1, 2, and a 3 in progress here right now. If we look at the E-minis for the S&P, these are your tradable S&P futures here. Again, big move down this morning. Coming off this wave 2 up here. Drop below wave B support. Drop below the pivot. We should be good to go toward a minimum wave 3 target down here at 43.20. Obviously, if it breaks out above wave 2 here, that's going to invalidate that, right? Dow Jones. Dow Jones, funny. It's the least fallen right here, right? It's the least, I believe it's the least amount of movement downward here. But it has dropped below that wave 4 support at 35,577 and 14 cents. It's dropped below the 1 hour pivot. So that's the first clue that that top may be in. We need to see it drop down below wave parentheses B support here at 34,264 and 57 cents to kind of say, hey, all looks like wave 3 is probably in progress toward a minimum expected target here. Right down there at around, it's going to do that again. All right, let me change that. 31,861.50 kind of area. 31,61.50. Yeah, right around there should be that wave 3 minimum expected target. But we've got to get through that other area, of course, doing that there. But, not looking too rosy at the moment. And again, if the excuse me, if the FOMC does what it's kind of looking like it's going to do, we should be heading down. Now, if the FOMC does not say, hey, we're going to raise this to 30 billion, and if they don't, it's hard to say them not speak hawkishly, but if they don't, then everybody's kind of anticipating that. So if they don't, you can see this will probably rocket the other way. It'll probably go up real well. Knee-jerk reaction. And we might end up getting, potentially a new all-time high in the indexes. But as long as they do what is kind of expected at least, then we should, I believe, see it continuing to head further down there. All right. Let me see here. So, yeah, that's what we're kind of looking at with all that, guys. Oil, let's take a look at oil here real quick, and then I got to go. Let me see here. Oil. Here we go with oil. Breaking down once more this morning. We're in basically a third wave down. So, we'll see what happens here. Right now, if this is a 1-2 here, this should give us a wave 1 minimum expected target down here of 67.05. If we can get a breakdown below this wave 2 of wave 4 here, of wave C of wave 4, and 65,660, that should really set up the likelihood we're heading down here to wave circle 5 of wave 3, minimum target of 57.65. A breakdown below wave B support here will add confidence to that count. I've got it as an ABC, and then 1, 2, 3, 4, 5 as an expanded flat here for wave 4, which rallied up about 61.8%. But, again, stayed away from the wave 1 area here at 74.76. By the way, with the dollar doing what it's doing and oil doing what it's doing, USD CAD has been a great trade. I got out too early the other day and hit my stop loss at, how much was that? Got in at 1.26169. Hit my stop loss at 1.27195. So about 103 pips there. And then it proceeded to rally about another 180 or 100 after that. And then it pulled back some more. I got another small move there from, what I get here, from 127.996 to 1.28153. And then again this morning from 1.28439 to 1.28563. So, 10 pips, 20 pips, 100 pips, kind of doing that. It's been a great, easy long with that. We'll see how far that continues to last there now. Yeah. So, that's been a pretty decent trade in there. I don't know if any of y'all have jumped in on the USD CAD, but yeah. Anyway, okay, guys. Well, listen, I'm going to get out of here. Again, trying to get these formats around an hour now. So we're about an hour and 15, so I'm going to get out of here. I hope to God you guys have an amazing day, an amazing week. As always, we'd absolutely love to have you with us over at howtotradetowin.com. If you just want to take advantage of it for a month, there's more than you'll get anywhere else for a month. Just make sure that you don't squander that opportunity. Jump in there, learn as much as possible. So that way when your month's up and you decide not to renew, you've got a great base under you. But pretty much anything you wanted to know about trading, you're going to learn over there with us. And we'll bend over backwards to try and help you guys out. Okay? So, yeah. That should do it. As always, remember, the only thing you control in the market is how much you lose. So please keep working on risk management, guys. I tell you day in and day out here. I'm not sure how many people it comes, how many people it gets across to, but your money, you make your money with your risk management, not with what you're seeing on the charts, not with Elliott Wave or with Wyckoff or whatever. You make your money with your risk management, guys. That's absolutely the end all be all to trading. That is the secret sauce. That is what you were looking for, even though it doesn't seem what you were looking for. So, as traders, you should spend an inordinate amount of time making your risk management better and better and better. 25 years of doing this, I still work on my risk management, guys. That's how important it is, okay? All right, if I don't see y'all over in Discord, then I will see you on Friday, 11 a.m. Central Standard Time, and we can talk about what the Fed did tomorrow and where the markets are potentially going after and what it means for everything else, all right? Be sure you're following me there on Twitter and Facebook and all those other fun places. I don't post a whole lot, sometimes more than others, but I'm not an influencer of the sort that you're used to. I can't stand small talk and whatnot. So I don't, if I post something, it's because it's something that you really need to pay attention to. So if that's up your alley, then be sure and follow me there, TX West Capital on Twitter, all right? You guys have a great week, and I will catch y'all on Friday. Or everybody else over there in Discord. Take care.